Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future 1%ers? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with my homie, Kenny Coins. What up?
What's good? What's good?
Just chilling, man. Just chilling. We was out for a week, but we back now. You know,
Back
during that week, man, we done had a wild ride in the stock market. I mean, hey, it hasn't been like wild, but it's been
like the Wild West.
Yeah, we've had a couple issues here, but I'm not even worried about it though. But I'm just saying, you know, there was a nice little buying opportunity there for a little while. I mean, there's still buying opportunities now, but you know, the stock market really dipped down more towards that 200-day area on the yearly chart, and that's where I like to really buy. That's where I'm like, yo, I'm about to get some real good deals. You know, when the Dow on the yearly chart is down close to the 200-day, I actually went a little bit below it. You know, you start buying up. Actually, everything went down towards the 200-day moving average. So I caught some deals. You know, we back up a little bit right now, but my problem is the same problem that we talked about maybe 2 podcasts ago or something like that. When the stock market takes just a small dip, everybody talking about recession, and that's when you want to buy up. You know what I'm saying? Because we sitting here at 26,556 or 66. You know, that's nothing. You know, that's like a 600 point drop from, you know, our highs or whatever like that, or maybe like 800 point drop from the highs. But whatever it is, that's not enough to be worried. So, man, what do they say? When people are fearful, be greedy. When people are greedy, be fearful. And you know what I'm saying? That's how I'm trying to live. I'm trying to live by that in the stock market. What you seeing out here, Kenny?
Honestly, man, to tell you the truth, I think we're at the end of what you call it, a political era.
Yeah.
I'm telling you, man, we're not moving as fast as we were as when his presidency started, because we were jumping 1,000, 2,000 points. We're not moving at the same rate of speed anymore.
So is the stock market the presidency stock market? This is what
yes,
is fueled by.
Yeah, straight up, yes it is. Y'all know that. So pretty much what I'm trying to say is that it's not moving at the same speed, same rate as it was 2-3 years ago. It's coming towards an end. Let's face it. It's coming towards where it's like it's starting to get stagnant. People are trying to figure out where we're gonna go. You know, is this man gonna be here for a second term?
Well, we can't.
You know what I mean?
It can't go up like that forever. I mean, that was rapid fire. You know, so
yeah. It can't go up that forever. It just but it can't be a coincidence that this man's president, his first term is almost over, and the market's starting to stagnate out. This is just it's starting to be stagnant now. We're staying between 26,000 and 27,000. We've been there for a couple months. You know what I mean? We're getting close to the end of the year. This is where most people make all their money, shopping, spending money. A lot of money is being made through this time of the year between October and January. Right. I'll even say February.
Right.
You know what I mean? A lot of money is between October, November, December, January, February. A lot of money is being made in those 5 months. So, I think wait and see. And there's buying opportunities, buy it. But I would just sit back because, the president election is around the corner.
Yeah, but it's
So,
always around the corner though. It's all every 4 years. It's always around the corner.
yeah. And every 4 years we do the same thing. I'm just saying. I'm just saying. You know what I mean?
Oh,
So,
okay, so if you think about last year at this time, because I remember around the middle or the end of October, I was in Florida, and I remember checking my phone, and the stock market started to take a dive. So this is when the market last year started to dive, because I'm looking right now, man, the Dow at the end of 2019, it ended at around 21,000. The low was
like,
at 21,697. That's when you need to be scared. You know what I'm saying? Not right here.
I'm just saying, man, look what you just said. And the end of 2019, the Dow was at
21.6.
2018, right? Last year, 2018.
Yeah, I'm sorry. I said the end of 2019. Yes, the end of 2018. I'm sorry.
Yeah, in September and October 2018, we was at 26,000.
I know. No.
We took a fall.
Yeah, I'm saying this
Yeah.
time last year is when we started to take a dive.
No, I heard what you're saying. That
Okay.
we took a fall from 26,000 to 21.
Right.
That was huge.
Right, and that's what
I'm just saying.
That's what I'm saying. That's when you need to start being scared. But right here,
Yeah.
I'm like, I don't, nah.
I don't know, man. You might make a good point.
And
But
do I think that's
knows?
gonna happen again? I don't think so. But to your point where you're like, yo, we getting stagnant. It's not moving at the same pace, which you're right. But at some point, let's look at it in terms of individual stock. Let's say,
if
let's
it
just
goes down, man, the only far I can see it going to 24,000. 24,400. That's the farthest I can see it going down.
Mm-hmm.
You know what I mean? But let me tell you, man, if you just look at the chart, man, this thing is going up.
Right, but I'm saying that in order to see the market get over like 27,400, we have to look at it like stock. So if something like Facebook, let's say Facebook market cap was like, almost $1 trillion market cap, right? What justifies it being $1 trillion market cap, and how can you get over that hump? I guess that's not a good example. I'll give you a real world example. A dude had messaged me about Nokia stock, and he was like, man, at the time Nokia stock was like $5.02, and he was like, man, I can see this. They doing 5G chips. I can see this going up. And he was like, what do you think? And I was like, man, I can't see this going any further than about 520, only because their market cap is already like 28 billion. Like, do they have enough technology to justify this going to, going to like, 40 billion, can you see that? And like, I couldn't. And that's the same thing with the market. When it gets up there toward that mid 27,000 area, you got to be able to prove that you can stay above that area, or you can get above that area. If you can't, it's just going to go back down to reality, which seems like it's around this high 26,000 area. So, with earnings season around the corner, or it's actually earnings season basically now, this could be make or break. We could see, 28, 29. Or we could see, 24, like what you talking about.
It could go either way, man.
It could go either way.
We're in the middle. We're in that smack dab in the middle. So
right.
It could go either way. So, like, I'm not really. That's what I'm saying. It's just like it could be a lot of things. It could be because of the election. It just could be because a new season's coming around. Many different things. Now, who knows?
Right.
So it's kind of more to wait and see, or you could just pick a side. Me, I'd rather wait and see, let the market pick a side, then jump on.
See, I don't like doing that. I like to take my chance because I like to trust my reads, man. So if I'm reading in and I'm like, yo, I see this here, I see this at a certain level, I'm ready to jump in and buy. Hey, we got Xtro on. We got Xtro. What's up?
What's up, man?
Yo, welcome.
What's up, man?
Man, we brought you in the middle of the podcast. I guess you got to.
Oh snap! I got the grand entrance. Okay, yeah.
Yo,
Good.
Xtro,
Good.
Xtro. Hey, we were just talking about the stock market, man, and
Okay.
I would like to get I know you just hopped on,
Yeah.
but we like to get
looking at the Dow.
We're looking at the Dow, right? And we're just talking about how it can't get above 27, basically 27, until something basically, I'm saying earnings season. If earnings season can prove itself, maybe we hit 29 or something like that. But if it has to be there has to be a reason to justify how high the stock market is going. If it can't justify it, then it's gonna go back down to reality.
Absolutely. That's the way I see things right now too. Is you have a nice run up. The way it always works is things run up and then it's got to prove itself. So at some point in time, you're going to have a level test to see where the market really stands. And that's just all it is. We just had a nice run up and it's just time for a pause. And there's nothing wrong with that.
Man, sometimes I feel like the market just talk all this trash, get all there. And after that, now it's time to prove itself.
Right. You got to get a chin check.
And then, you get checked. Then after that, next thing you know, we had 27. Now we at 24.
Right. Yeah, somebody going to check it and be like, what's up? And then it's either going to knock the market out.
Yeah, that's basically what it is.
That's real life.
So where I need to know the extra read, though. As far as the charts.
Oh, okay. Well, the extra read is a pause. I still don't see the market doing anything. I don't think earnings are going to really do too much anyway. I think all that's been baked in. I think the market is going to continue to do a pause for the year. That's the way I see it.
Didn't I just say that?
Didn't
I just say that?
Now y'all against me because see me.
Because I just right
y'all trying to double team me now, man. What's up?
Right before you got on, I said that.
Now me, I don't like to wait. You know what I'm saying? I don't like to pause because there's always a move being made. You can either make money going up or going down. You know what I'm saying?
Right.
And
right.
If it's a pause, most of the time, hold up though. If it's a pause, most of the time, it's like it's not like dropping, but it's going down. You can make money with the puts or shorten whatever. You know what I'm saying? So I don't really like sitting on the sidelines too much.
What year was it? 2000? I forget what year it was last time it paused. It might have been 2 years ago, before all this happened, right? Right before Trump got in, right, where the market was in a standstill, and then it started to go up. But ain't nothing wrong with the pause. You can make money off of that too, man. There's all sorts of strategies that you can get paid.
What I'm saying is, like, Kenny was kind of, before you hopped on, Kenny was like, man, I'm trying to wait and see, basically. And I was like, man, I ain't trying to wait. You know what I'm saying?
Oh.
I'm greedy.
Well, yeah, when you see a nice little range playing out, you could take advantage of that.
Yeah, I'm not saying don't take advantage. I'm just saying that I said there was two things you could do. Either you could pause or you could pick sides.
Yeah, right. Yeah.
There's a third out. You could play the range, but I'm gonna tell you something. Even if you play the range, you still gotta pick a side.
Yeah, that's still a side. It's still even a pause. Even a pause is a side, I guess. You know what I'm saying?
You know what I mean? So you can play any way you want, but at the end of the day, it's gonna go up or down. So you can play the range, and after that, when the range stops, you still gotta pick a side. Either you're gonna stick with it and say it's gonna go up, and then play that side, or you're going to say it's going to go down and play that side. Either way, after the range is done, you got to pick a side. That's what I was trying to say. I'd rather just wait, let me see an indicator that saying it's going up or down, then I go from there.
Yeah, that's true. Ranges aside. So you got a couple of different options on here, but yeah, money is to be made. We're gonna
That's the bottom line. That's the bottom
Money
line.
is gonna make it. We gonna make it.
Yo, speaking of that, man, so we're gonna transition into the topic of commission free trades.
Yes.
I need y'all's opinion on that, and then I'm gonna give my opinion on it, man. So somebody start us up, man. Kenny, what's up? How you feel about commission free trades?
It's not gonna work. It's not gonna work any longer. I think too many companies coming out and doing that.
But how is that not gonna work, though? I mean,
Because,
I would think that it would work.
Just like everything else in life, we overdo it or over abuse.
So if people gonna overtrade and lose money.
And if people gonna overtrade, companies gonna lose money because they ain't making the same amount of money they were making on the fees and all this stuff. So, you know what I mean? They gotta find different avenues and different ways. And there's only gonna be a few companies out there that can actually sustain the actual trading type platforms like that. First of all, it's going to be the big banks because now Chase got one. You can go on Chase and start trading on their platform. Now Bank of America coming out with one, Wells Fargo coming out with one. Now you can easily just sign up. You know what I mean? If you sign up in the first 90 days the platform's out, you get like 200 free trades. It's, you know what I mean? For the rest of your time until you use up the 200 free trades, there ain't no 60, 70 days limit on them. So, you know, I think a lot of people is going to start jumping on that. We're in a society where everybody's trying to make money online nowadays. You know what I mean? And they're willing to do anything just not to go to an office.
Yeah.
And that's facts. You know what I mean? Anybody under 35 is willing to do anything to not go to an office right now. And I think we're going to flood the market with these zero commissions, and there's going to be a lot of companies that can't sustain it. Or they're going to start putting fees somewhere along the way. Either they're going to say, okay, initial trade, the first initial trade, but selling going to cost you this much. They're going to figure out something. And not every company's going to, just like Bitcoin and the .com bubble, not everything's going to be sustained. We're in a generation where we overdo anything. Anytime somebody finds something, a little niche, 40, 50 people start jumping on it. And then they all start a business.
Well, what you think, Xtro?
I think it's totally awesome. I think it's about time. I disagree, Kenny. I think it's definitely going to work. I think as technology continues to evolve, things get better. And we've seen examples of that in our lives where we've had something continually get cheaper and it sustained itself. Now, Give me an example. Electricity. Electricity has continued to get cheaper. We've had technology evolve. And
what electricity you got? My bill's still $150.
You're doing the wrong thing.
Because the only time it goes down when there's not winter.
Oh, no, man. My bill has continually gone lower. But I will say I'm actively going at it, though. I'm always monitoring that. So
you see, but you got to monitor it, though. I'm not talking about the only thing that successfully got cheaper is porn.
Right.
That is the only thing that got successfully cheaper.
It has. It definitely has.
Still make more money than anything else in the world right now.
So with the zero commission stuff, these banks, they make tons of money doing other things, making transitions on actual money, because that's what a bank does. It makes money off of borrowing money from the Fed. So when you take money out and you get interest on it, or when they get interest on it, that's their claim to fame. This stuff is just extra. They're not sitting here banking on that as their bread and butter. So for them to say zero commission, they ain't getting murdered on that, man. They just losing a piece of revenue, but they'll figure out another way to make some other revenue. So it's all good.
That's the reason why I said big banks won't be hurt. They can do the zero commission. I'm talking about the other like WeBull and Robinhood, who are not the big banks, who hasn't been here for 75, 100 years.
No, I think.
Oh, R.I.P.
Yeah, I was about to say.
No, but this is good though.
That's what I'm talking about. Those guys won't survive because once Chase, Wells Fargo, Bank of America, the Deutsches, the big banks of the world, once they start doing zero commission, you know what I mean? I just don't see why people want to flood to them. They're trustable, they're reliable, they're, you know what I mean?
Platform is better.
Know what I mean?
Wait,
platform is going to be better. You're talking about a $2-3 billion platform.
But yeah, let me interject on that. Why do we care if they survive? Isn't this the regular whole thing for business, where
you gotta find it,
you adapt and you just figure it out? So if their claim to fame is zero commissions, and then the big boys stepped in and took the ice cream from them, they need to be able to. They got to scrap, man. So
right. Because they basically did it to themselves.
Right. Yeah, and
I'm not saying there's nothing wrong with the zero commission. I just feel like there's already so many companies out there doing it that I eventually can see this backfire. Now, I love the zero commissions. Don't get it twisted. I just say,
I love it.
It might backfire to the point where, like, okay, maybe 10, 15 years down the road, you'll start seeing another set of fees getting integrated. Now there's still zero commissions, but now they might be, to hold an account, you got to pay $5 a month.
Right. Yeah. Like Robinhood kind of do that with, if you want level 2 trading, which Ameritrade offer for free. You know, you got to pay $9 a month or something like that.
Yeah, they're gonna start doing that. There's no way they can sustain themselves.
I think that, man, I think that I like zero commissions, but for Ameritrade, I'm looking at Ameritrade, right? It's not truly 100% zero commissions. So I'm not even talking about options, because you still got to pay 65 cents for options. That's basically zero. But if you want to buy over the counter, like let's say Nintendo, people like Nintendo, but that's still over the counter. It's still commission on over the counter stocks.
Why is that still over the counter, man? That thing is like nearly like 3-4.
Yeah, I don't know, but
it's not a stock that's in our market though. That's an ADR, so that's a totally different product.
I know, man, but it should be part of our market, man. Nintendo's literally ingrained in American society.
Well,
don't worry.
Is listening.
After Apple buys them, you can buy Apple stock, and then there'll be Nintendo. But man, I like zero commissions, and what I also like about it is it's gonna bring more people into the stock market, and more people into the stock market makes the stocks in general go up, because you're taking more shares off of the market. You know what I'm saying?
Yeah.
And so I also think. Oh, go ahead. I'm sorry.
No, I was just gonna basically say the same thing over again. So go ahead.
Now, to add on to what you said about more people coming into the market, that's more suckers, right?
I don't believe that. I don't believe that.
No. Let's keep it real here. The new people that's gonna trade in the market are gonna be suckers, because we was them before, right? So
before though,
we gonna take their money. I'm sorry. Taking your money when you come on, that's just part of the game. It's the tuition to the game.
The tuition.
Yeah, you gotta pay it. Everyone pays.
The price is high.
I mean, I don't
try to make sure your class credits are cheap. That's all I'm saying.
I don't agree with that. I mean, I do. New people, obviously, they knew, but it depends on how you trading though. Like some people, when they first get into trading, you know, they want to buy some of the most ridiculous stuff. They'll be like, "Man, I'm about to buy I got some GoPros. I'm buy GoPro." You know what I'm saying? It take them a while.
Sounds familiar, Xtro.
Hey, we gotta let Xtro off the hook, because that was like 4 years ago. But still, when you said that Xtro, I was like, man, that is so not Xtro, man. That is Xtro. What is going on? I can't believe you picking the GoPro. But you know, people when they first come into the stock market, they buy things that they like in the house. So they're like, man, I like GoPro. So I'm like GoPro. I like I like taking pictures. I'm by Kodak. You know, they be doing stuff like that. You know what I'm saying? And it take them a while. It take them a couple losses to figure out that, man, I need to be buying something else. Just because I like it don't mean that it's a good, investment. So that I think that's, I'm putting words in your mouth, Xtro, but I think that's maybe what you're talking about, where we take
that
your
is
money.
What I'm talking about. You pay your tuition, man. Like I said, everyone comes in.
One guy, he was asking me about stocks. Just to make extra point, one guy, he was asking me about stocks, and he said, like, "Oh yeah, man, I'm gonna buy Sears." I was like, "Man, what?"
I remember when you told me that before. I think it was on here. You told me a dude said he was gonna buy Sears.
So I was like, "What?" Yo,
yeah, that's a terrible investment.
I went to go buy 2 washers from Sears. It was like, yo, no.
Yeah, people think like that though. But when people talk to me about investing, I actually encourage that kind of investment though, because you can't tell anybody what to do. Yeah. You can't be like, oh man, buy this, because they may not even be able to relate to it. And plus, stuff that we buy is different. We may be like, yo, I'm buying Baidu. That's $100-some a share. They don't realize. You already got
that level of understanding.
Right.
It doesn't matter how much the share costs.
Exactly. They don't. All they see is like, man, I'm only getting 1 share for $100-some. I want to get.
Right.
I want to get 200 shares for like $3. You know what I'm saying?
Yeah.
And it don't really work like that. So I kind of try to encourage them, like, yo, what are you into? What do you like? And, they may say something like taking pictures. I would never recommend GoPro or something, but I kind of just tell them like, yo, if you, around the house you like Teslas, may want to look at Tesla. If you like, Ford, you may want to look at something like that. I don't know, but that's how you should start if you just like coming in not knowing anything. I think that you should start with just things that you like around the house. Yeah, now, I mean, you got to be smart about it, though. I mean, common sense will tell you don't invest in Sears. I don't care how many watches you bought there.
I do got a question. Why somebody would walk into Sears and want to invest in it?
It's all dusty, dirty.
That judgment, you should have been like, this game ain't for you. Yeah. You clearly could not see an investment. Like, you could walk into Sears, man. You just walk back in the 1970s, man. There's just nothing going on in there, man. There's nothing going on that screams out, yes, this is the way to go.
Man, you know what else I'm feeling like it's going the same way? Macy's.
You think Macy's is
I think Macy's going the same way. I mean, I think that they trying, though. Like, when I walk into a Macy's, I feel like they trying to update it, clean it up and stuff. But I don't see the same foot traffic in Macy's. I do see them becoming a little bit gloomy when I'm walking through there. It's kind of like, it don't feel like Sears, but it feel like Sears. It feel like the early days. Like, when I walked in Sears in like 2002, that's what it feel. That's what Macy's feel like. It feel like, all right, y'all here, but, you need some changes. You know what I mean? Like, ASAP.
I'm going to have to walk through Macy's to see what it is. I think Macy's is one of the retailers that might stick around. I'm shocked that JCPenney is still around. I'm really don't understand how that store has any brick and mortar around right about now.
Because malls need something. Malls need something.
I still think that the ultimate plan that's going to happen with retail is that they will eventually all align with Amazon, like the whole thing with Kohl's. Like, I called that one.
Hold up, man. I think Marathon Money called, man. We didn't call Kohl's, but we did say that we said Target need to team up with Amazon.
Right. We did call that.
That was Kohl's.
Amazon will eventually have some form of brick and mortar where you can bring in something and boom, it happened with Kohl's. And I think that's going to be the way that Amazon will continue its dominance when they partner with stores like Macy's and whatever. Because with clothes, people still like to try them on. So now that they're buying them online, if it don't fit,
about that.
You got to take it in.
Extra, I don't think Amazon cares about. Amazon is like, yo, I feel so bad for taking y'all business. Look, let me do y'all a favor. I'll just start making my shipments to one of y'all stores.
Well,
that's what I
can see Kenny's point. I can see Kenny's point because you can't. That's going to be looked down upon if there's no more. If all you're doing is shopping on Amazon, Amazon got to throw some of these dudes a bone, like seriously, because
you think that's what it is?
I do think that's something.
Man.
I don't think that's 100%, but I do think that has something to do with it, because if Amazon, if all these stores close, Sears already didn't close. I know JCPenney's hasn't fully closed, but they're gonna be. You can basically call them fully closed.
Yeah.
And then if you close, if they shut down a Macy's, man, Macy's stock right now is like $14. You know what I'm saying? So if they shut down a Macy's, you shutting down almost every cornerstone store, store of the mall.
So if that's true, then why did Toys R Us go out?
Yo,
I mean, they're going to take out somebody. They're going to take out people.
That was the only toy store left in the world. It's gone.
That's true. It's gone.
So if you're going to throw somebody a bone, why not them?
Toys R Us may not have wanted that bone, though.
Yeah, I mean, this is business. They don't care. I personally don't think they care nothing about that. I think it's just a partnership thing that works out for them. The benefit is for them to be able to continue to purchase off of there, and gives them an advantage now that you can still have because let's face it, people are used to returning things to a physical store. So if you have that now, that takes that off the plate, and you can partner up with somebody, and they're like, oh thank you, Amazon. Thank you. But they'll have more footprint, I think, with other stores in the future.
Yo, anybody realize JCPenney's 92 cents?
Yeah, I do.
I haven't. Last time I had looked at it, I know it was like $2 or something like that. I didn't know it went down to 92
cents. It's a penny stock now.
What's the market cap right
penny
now?
Stock.
What's that? What's the market cap? Hold up.
300 million.
$2.
Man. Yo, I can't see how a $291 million market cap. How can they even survive? They have so many stores. It seemed like the bills with the employees, just regular bills in the store, it would be more than that over a span of like 3 months or something like that.
Man, that operation has got to be that's got to be a monthly thing for them. They got to probably lose $291 million a month. Straight up. You think about how many stores they got, how many electric bills, gas bills, water bills.
That's what I'm saying.
All of that.
And we ain't even talking employees. We ain't even talking employees, paying the employees.
Right. We didn't even get to the employees.
We ain't even get to the inventory.
Every single month.
Y'all.
They probably lose that every half a month.
And don't forget, they still got to buy inventory. They taking out margin accounts to do this.
Oh my goodness. They still got to buy inventory. So let's buy Visa because they buying that on credit.
Oh, man. You know what's crazy? How do you used to be $45 billion and now you $291 million?
They suffer from the same thing. They didn't update anything.
Oh yeah, I was about to say, man, people suffered from this. All started in the early 2000s. Like, people were so reluctant to sell online for some reason. They thought, like, man, nobody wants to sell online. Even if you think, or nobody wants to buy online. Even if you think people don't want to buy online, why wouldn't you still just? It's there. It costs you almost no money to get set up online. Just set it up.
Back in 2002.
Just set it up.
It cost it was pennies on the dollar to set up a website. Matter of fact, they was asking people to set up a website for free just to get the internet going. It costs nothing to set up a website. You know what I mean?
All they had to do, just have it there, and it just don't make sense.
They could have done this. They could have said pick something online and then go pick it up at your nearest store. They could have done that. It don't matter. Do something. Man, it's just horrible to look at a company like JCPenney's, and that used to be $50-60 billion, $90 a share to go from what they are now
to 92
to 92 cents, bro. This is horrible.
I mean, dog, look at Macy's. Macy's high, 20-year high was $73.61. They $14.96 right now. Market cap at least they in the billions.
Macy's can have an opportunity to turn it around.
I think that they do, but it's very, they late
it's
too.
It's a slim shot. No, JCPenney's over. It's done.
Yeah,
It's finished.
I
Know
think
why
we
they
all
still
agree.
around.
We all agree on that.
Yeah. I went to a JCPenney's. I just looked at the staff. I said, y'all still getting paid? Y'all check clear?
They paying
Y'all
people on
check
like
still
prepaid
clear?
Visa cards.
Yeah, I can't imagine anybody saying, "Yeah, we going to JCPenney's today." All right.
I was at Macy's on Friday. It ain't that bad. Macy's was actually clean to be in there.
I mean, yeah,
Hey,
it's
clearance,
clean.
The clearance in Macy's is still on point.
You can't lie.
That's facts.
I mean, but can you make money on clearance though?
Hey, man, I'm gonna make money off of clearance. I'm save mine.
Yo, y'all know Sears got moved to the over the counter, right?
Well,
So
yeah,
SHLD is now SHLDY.
No, SHLDQ.
Oh, Q. Yeah, Q.
I'm surprised that they even on the counter, like just period. You know what I'm saying? They should, they should be off the counter.
Their market cap is $28 million now.
We could probably buy them. We could probably buy Sears.
I think together we can figure out.
We could buy.
We got enough net income, and
we could buy Sears.
We could buy a nice 20% share of the company
and appoint ourselves like CEO and stuff.
Oh, that'd be dope. And then we get the bailout package.
Hey, we might have a conversation after this podcast. Depending on who the next president is, who's going to give a bailout, man. I'm on it. I'm on it. But, yo, man, we running over clowning, man. So, yo, follow us on Twitter, anything, Instagram, whatever. You can follow me on Twitter, Facebook. I don't know. My name is always the same, Camboni11 at CAMBONI11. And also follow us on Spotify. Listen to the podcast on Spotify, and hit us up with the Marathon Money Cash App. You can Cash App Marathon Money, all one word, if you want to support the podcast. Where can they find you, Kenny?
Kenny Con 23 on Instagram, Kendrick Collin on Twitter. You can hit me up anytime on there. People have all the time. Definitely follow the Marathon Money. Marathon Money's on Twitter, Facebook. You can hit us up.
What's up,
Xtro? Hit us up on the website.
What up, Xtro?
You can find me at Wincrease Team. That's on Twitter, and it's on StockTwits, and then you can also find us on Facebook. And yeah, do make sure you hit the website, wincrease.com. Option plays every single week. And let's keep getting this money.
All right, man. Good looking out, Xtro.
Oh, thank
you. He came in, sabotaged the show. All right, man. Next week. Peace.
Peace.